Okay, beautiful stuff. Welcome, you amazing human beings, you machines. Yeah, Warren saying, Little Birdie told me it's going to be electric session. That's what it is all about, guys. Again, thank you for showing up. Thank you for putting the time and effort in. This is something otherwise I would have just done by myself, but went home after dollars for lunch, got a bit of rest, got a bit of sleep, got a shower. Not wearing a formal shirt this evening. It's just too late to be hitting. I'm reading Alvermo's thing saying, hit the like, let's go. If you're up this evening with us, smash that like button. Let's see the love. Let's see what you're up to. Guys, we're going to be spending a ton of time really breaking down earnings calls. So I'd really like to know from you, have you traded earnings calls before? Is this your first time? Are you joining us for the first time for a Trade-A-Thon to go through this data? Super important that we understand, where you sit from a understanding perspective. If it's your first time, or this is just something, you've done a few times over, that's going to be super important. So I'd love to just know from you, vote number 1, if you've done this before, you're well aware of what's going on. And vote number 2, if this is your first time ever dealing with an earnings report. I'd love to know what you guys are thinking about that. Let's just see here. I've got a few ones. Actually, there's a lot of first timers. Beautiful. I can see Keller saying number 2, Aaron saying number 2, Zachariah saying 1, Rachel saying 2, Brandon, Chet saying 2, Gawain 1, Tamela 1. All right, beautiful. So we've got a great mix of people, both sitting in the first time seat, and then we've got a good amount of people that have done this before. Dennis saying 15. Dennis, I don't know what that means, but you get points for style there. Stacey L saying first time, Andy saying 1 as well, meaning first time. Beautiful. So that means we have an opportunity to really break this down. And again, if you're a trader and you're used to just trading normal markets, you're trading FX, you're trading fundamentals, you're trading price action, whatever it is that you're trading, this is taking your trading to another level. It's adding a level of diversity to what you understand about the markets, and how to just trade stocks and companies with a bit more information in terms of what's going on. All right. So let me just give some framework to this evening. Right. We are having a earnings call that is coming up at 12:30 this evening. Technically 12:30 tomorrow morning, technically, if you look at it like that. And what is that? Well, in essence, publicly listed companies have to declare their earnings. They're publicly traded firms. People buy and sell their stock in a public platform, and so they need to understand what the financials are. So when you trade, stock of a company, not a CFD, but actual stock, you're holding a stock of something long, it means that you're technically a shareholder in that company. You're holding dividends, you're holding stock of that company. So what happens is every quarter that company releases a report, and that's basically a statement of the company. It's earnings, it's how much they're spending on R&D, it's expectations, it's a ton of things that are available to us to assess the health of the company, and these are very heavily scrutinized. Now, when we speak about smaller companies, right, there's a way of evaluating penny stocks, and you look at the evaluation as they get listed, and there's that way of trading. But when it comes to these titans of the industry, and specifically this evening we're talking about Tesla, they have such a big and valuable market cap that their outlook has got a big effect not only in the markets, but again on their share price, because there's just so many people involved in the buying and selling of their shares, speculating their shares, also involved in other instrument classes like indices, so on and so forth. So the link that I've sent you guys, I've pinned it over there up in the chat. I believe it's the first pinned message in the chat there. That is essentially every publicly traded company has got an investors relation site. Right now, generally speaking, earnings are either declared after hours or before hours. Very rarely is it ever declared in trading hours or in New York Stock Exchange hours, right? So Monkey Zar FX is saying, what can we trade with this information? You'll see very quickly, because I'm unpacking this information, because we're going to dive into the data and understand how they declare this data, how we utilize this data, and how markets will react to this data. Again, we had Microsoft declare their earnings yesterday, so we have a very clear path of how the market feels currently, because from season to season, right, markets react differently. Companies can beat expectation. They can say this is our earnings per share and they beat it. They can say this is our revenue and they beat it, and the market still are unimpressed. They drive that stock down, right? It's the same as trading FX or indices, where the fundamentals come in that should boost that indice, and we see a bit of chaos towards the downside. Okay, so in essence, the link that I've shared, I'm going to share my screen with you guys, is this link right here, and it basically goes directly into Tesla's investor relations site. Okay, and what you'll see here is every quarter they have a press release, they have a shareholder deck, and they have an ability to listen in to Elon Musk addressing the board, right? And this is where the big value comes in. Now, what are we looking for in the shareholder deck? What sort of values are we looking for, right? So there's two main values that the markets consider of importance. We have what's called EPS, and this stands for earnings per share. So it means that if you own one share of Tesla, then it means that your earnings per share, let's say it's $1, it's $2, you'd receive a $2 dividend on owning that share. The other big thing that the markets consider of important factor is revenue. Did the company meet their revenue expectations? So before the quarterly release is set, we get what's called a forecast or an estimate, just like on a fundamental event. Let's call CPI, let's call it NFP. On CPI and NFP, there's an estimated number. Is CPI going to go up? Is it going to go down? There's an estimation. That forecast is also given to public traded companies on a quarterly basis. So they need to meet or beat that forecast to keep investors happy, to keep shareholders happy, to remain a valuable stock or something that's profitable in the long term. So we're going to break that down. We're going to go into that. We're going to have a look at that and what does that all look like. So I'm going to switch over and quickly show you what the expectation is from a Tesla perspective, and then we can jump in and we can break that down together, and I'll actually break down the report for you line by line prior to actually hearing from essentially Elon and understanding where they sit there. So I'm just quickly going to get the estimation for us. Okay, there we go. So I'm going to share my screen really quickly with you guys, and we can see that quarter 4, which is behind me here on the screen here, that's scheduled and coming up again for the 25th of Jan. Remember, this is US time, so Tesla is obviously coming up. Is it true that Tesla forms the top 6 in the NASDAQ share pool? Well, Tesla's market evaluation is just so big that they do shift around from between NASDAQ and Dow Jones, and they essentially get moved out from time to time. Let's just see how you Dennis saying looking forward to the guidance, good stuff. So if we have a look at quarter 4 here, there's an expectation on that quarter, right? I'm going to zoom in a little bit more here, and I might have to shift myself out the way, but I think you guys can see that. But there's an expectation of $1.11 expected per share, EPS, expected earnings per share. Then the revenue, there's an expectation of 24.32 billion. So what happens, right? After market hours, markets have already closed. We then essentially get this data, and I have this data for you. So we're going to break it down together prior to the earnings call. And then is that the end of it? Is that all? Is that done? For those of you who traded before, I want to know from you, what is the most important part? I want to know, in your opinion, what is the important part? Is the most important part beating revenue and earnings? I want to know from you guys. If you guys paid attention to the shows today, you'll know that that isn't the most important part. So I'll give you guys a couple seconds. For those of you who've traded this before, what is the most important part outside of expectations, outside of revenue? I'll give you guys a few seconds to comment there. I know someone's got it. Whether we are still awake, alive, and kicking, that I don't know. We will have to make sure our brains are functioning correctly this evening. So I'll give a couple seconds. The first one to give me the correct answer, I'll go ahead and credit your account with $100 as a deposit bonus equity. Let's see. First person, $100. Waiting for it. Aslam's saying he's sleeping. No problem. Meds are kicking in. We appreciate you. And just a quick shout out to our MVTs. We got some MVTs in the house here. I can see Aslam's in the house. Rivchua. Richua's asked, said how the market reacts. So Gavain's saying, what's the question again? So outside of the EPS and the revenue, right? Are we just looking to get the data on the EPS and revenue and it's done and dusted? What's the other factor that can have as big or even a bigger effect on the market outside of that? That's the question. and $100 credit towards your live account to the first person that answers it. Quickly just going through the MVTs in the house. I can see Shamina's in the house. Tumelo's in the house. Welcome, Tumelo. I can see John Mickett is in the house. Shamim is in the house. Beautiful, as well as Rough Chua. NFP Chippo. No. Almost. I'll give you guys another 20 seconds max. 20 seconds max. After the main man Elon speaks, everything can change. There we go. Aslam, well done, brother. So exactly what Aslam is saying. So why do we listen to the earnings call? Why do we need to stick around? Why do we need to listen to the earnings call? Because the earnings for the past quarter is only a fraction of the information, right? What we listening on the earnings call for is that forward guidance, right? Because we're getting past data. Quarter 4 is done. Quarter 4 was done in December. This is the data for December. So did Tesla meet investor expectations? Yes or no? We get that from the EPS. We get that from the revenue. Done. What's the next big thing, right? Is what Elon says about the future of the business, what he says about the future of economies. Now, why do we pay attention to these earnings calls? Because as you know, an economy and a government is basically run the same way as a business. If done right, it's a business. Right? So when these massive business institutions have these foresights on employment and laying off staff and future growth and headwinds, you might hear the word headwinds quite a bit this evening in the earnings call. And headwinds is a fancy word of saying challenges. They're facing some sort of challenges that are holding them back. But understanding what those challenges are a really early insight into the nature and the state of an economy, nature, the state of how consumers are spending, how consumers are buying. So you can utilize that data to look at the health of the markets overall, never mind just on Tesla itself, but most certainly, as Asama said, after the main man Elon speaks, right, what he says about forward guidance, the market cares about. So as an example, let's quickly have a look at what happened last night when it comes to Microsoft. So quickly, I'm going to switch over to Microsoft and I'm going to show you an exact example so that you understand what you're in for. Let's see. So Microsoft Corporation, let's give it a quick look at what ended up happening yesterday. Just want to get the scaling right here. Okay. Good stuff. All right. So what happened yesterday in terms of Microsoft is that if we look at their earnings, right? And again, TradingView is great for this. I don't know why my charts are broken. Just bear with me. If we have a look at Microsoft, right? Their earnings came out last night. Similar type of story. After market hours close, so on and so forth. Their reported or their estimate was sitting at $2.29 per share, meaning that we're going to give back investors, make them $2.29 per share. So if you held $1,000 shares in Microsoft, you would have a dividend of $2,293, right? Same page there. However, their revenue was estimated at 52,980 million, right? The revenue came in at 52.74. So they had a miss of only 0.45%. It's not a big miss. Initially, stock markets, remember, we see this gap because we don't have live data in the sector. Markets reacted immensely positive, right? The Microsoft share price skyrocketed. And then as soon as we got into New York Stock Exchange open today, directly after the earnings call. So in the earnings call, they forward guided that 2023, they don't look to have a really good year in terms of revenue. There might be a slightly reduced result from an earnings perspective. So the data was there, but in the guidance, in the forward guidance, Microsoft said, hey, 2023 is going to be a bit of a tough year. They're going to navigate it. They're going to do what they can. And all of the earnings that they made, all of that profit, Microsoft moved 6% after giving their earnings, right? All of that 6% was given back to the market and went into a negative just based on forward guidance. So the earnings were, in inverted brackets, inverted commas, positive, but the forward guidance was negative and had a bigger effect than the actual earnings themselves. And that is why we obviously pay close attention to what happens there and the type of information that is disclosed in that space. So that is why we're going to pay a little bit more attention this evening, and we're going to listen in on the call with Tesla, right? Again, that earnings call is going to be happening in the next 40 minutes. So we have a bit of time to kill in terms of analysis, in terms of setup, in terms of how do we deal with that. Now, again, luckily, we already have access to that shareholder deck, right? And that's what we're going to be able to break down together this evening. Now, again, if this is your first time seeing financials, if it's your first time seeing a financial report, please do not stress. There's a lot of number, there's a lot of data here, but I promise you it is super simple and super easy, and I'm going to take you guys through it step by step. So again, you might have traded some of this data, but you might have not had the financials at your disposal before the earnings call. And I think that's going to be super important that we break the data down prior to the earnings call so we have a better understanding of what Elon's speaking about and the context in which he's speaking about. Okay, so just remember this and just write this down. The first thing we need to obviously note here is what were the expectations. Let's quickly give it, there we go. So what were the expectations, right? It was $1.11, right, on the earning per share and 24.32 billion, right? So we just need to remember that. Now, if you go ahead onto that link that I sent you guys, that would be the investors, like I said, the investor relation disclosure summary, and you can go ahead and download the shareholder deck through that button there. And what I'm going to do is I'm going to copy the link address and I'm going to pop that in the chat as well. So if you'd like to download it and read along with me, you are more than welcome. Smack that link, download it. Let's break it down together. And hopefully through this process, you learn something and you diversify yourself as a trader, not just looking at price action and signals and all the rest of that we can get a little bit deeper and increase our knowledge in the markets. And again, it's a learning curve for everybody involved. Every time I go through this experience, there's something to be learned. There's some edge that I gain in the market by spending time on this. Okay, so in terms of columns, we have each quarter here. So I'm going to zoom in just while we speak about that. So for each column, we have quarter 1, 2, 3, and 4. Now here's quarter 4's results. We can see quarter 4 right there in front of us. So I'm going to zoom back out a little bit and just bear with me. But what we're going to do is we're going to look at just those high level numbers. What were the numbers that we were essentially looking out to beat or to deal with here? And what are the main items here? So what you want to look at when you're looking at these reports, the first thing you're going to see is these the automotive revenues. Now, when it comes to the expectation, they don't deal with just automotive revenue, they deal with total revenue. So we can see here that Tesla's total revenue for quarter 4 is 24.318 billion. Now, if we go back to the expectation on where they should have been, let's have a look here. There we go. If we go back to the expectation, they were supposed to be 24.32 billion, and they came in at 24. Let's just see here, 24.318 billion, right? So in my eyes, they've met expectation. They're slightly under, but they're in line with the expectation. The big number here, which I think the market's going to be the most impressed with, is if we look at the earnings per share that was expected to come out at $1.11. Now, where do we find that on the report? If we scroll a little bit further down, you're going to see an EPS attributed to common stockholders diluted. We're not looking at that one. We're looking at the one, let's have a non-GAAP. And that is going to come in at $1.19, right? Again, the market expectation here was $1.11, and we are now reading $1.19 in terms of the EPS. So what does that mean? It means it's a good thing for Tesla shareholders. You were expecting a dollar or so in terms of your earning per share. You're now getting $1.19. So they're beating expectation there by a good margin, right? So $1.11, they're getting in $1.19. It's almost 10 cents. It's almost 10%. I'd say it's around about 8% beaten. So they beat their estimate by 8%. So this is good. This, looking at Microsoft, this is good. Now, when we say this is good, it's good in relation to what? because again, we need to factor in price action. We need to factor in, where is Tesla in terms of price action, because you can't just say it's good in relation to what? Where's the price? Where's Tesla? So let's have a look at that first before I break this even further down. So we already know that the data is good. We already know that there's going to be a good reaction. So let's quickly just break this down. So over here we have Tesla in terms of their price action or their market structure, and you can bring up Tesla on any trading platform. Again, if you're a Globex 360 client, you just simply go to your market watch, and all you're going to do is just make sure you got show all on, and you're going to scroll down and you're going to look for TSLA. That's going to stand for Tesla, and you're going to look at Tesla. Okay, so looking at the bigger picture, for those of you going to look at share prices for the first time, you're going to see this broken chart. And immediately the first thing you're going to say is, Dane, this chart's broken, data's broken, what's going on? The reality is some of these large cap market stocks, and it's become common only in the last couple of years, go through what they call, they essentially divide up their stock. So if, their stock is trading at $2,000, they would give, each of their shareholders a share split of $500. I think Aslam has answered there as well, share split. So they give a share split by 4, so each investor receives 4 shares of $500 each, and they've done this multiple times as Tesla. So you'll see this broken data, but you can simply just see the share split over there. So example, $2,200 was trading at, they did a share split by 4, and shares dropped down to about 500. Shares built out and up towards the region. I'm just going to build it up there. Shares built up, let's have a look here. There we go, to the region of, let's see, $897, call it $900. And again, there was a stock split by 4 or 3, apologies, and owners or holders of that got 3 shares at $300. So again, it's a little bit fragmented, and it's a little bit difficult to look at the overall share price when it looks like this, because again, it's very hard to map long-term price action. I did find a site that links all of this together, and we will do that in a more detailed form a little bit later. Once everybody's used to it, and once we have more people that are used to sitting in on these earnings call, we'll break that down even further. But the biggest piece of data we have at our disposal is going to be this last segment. So running from, it looks like August 2022 all the way to current date. Now we need to get in there just to obviously see a bit more data. And I think the sweet spot here, a daily might do the trick. Let's have a look. Does a daily do it? So again, the second we have that other data coming in, we obviously get our charts looking a little bit pear-shaped. So we've got to try and make do with a little bit of a pear-shaped movement. So the first thing I want to point out is that if we only have this data to play with, the data that we see behind us, the past 5-6 months, we've got to consider that data. Now, Tesla has made an all-time low of $106 per share. Now, for Tesla, a company with such a big evaluation, they've had their bear turn. Again, and there's a few other things to take into consideration. Tesla, Elon specifically, bought Twitter. That was controversial. Elon's been in court because of his tweet saying he's going to take Tesla private. He secured the funding. We've got the Saudi sort of fund that was involved in a 5% stake there that wasn't revealed and then came out after the tweet. This is all messy stuff from 2020, right? That's all happening now. Elon's been in court. We know the issues about Twitter. If you haven't heard about them, you might have been living under a rock. But honestly speaking, Tesla has been bombarded with negative news, negative data. This is a good thing for people looking to get into it because it means that the share price is extremely low for a company that is doing so much, that has so much value across the board. I think we got to quickly do an intermission really quickly. I think we quickly need to do a camera change. So let's do a quick intermission and I'll get back to you guys. Let's do maybe 2 or 3 minutes. Let's do maybe 1 minute. 30 seconds, and let's see if I can get back to you guys. Okay, good stuff. I believe we are back. Camera's decided to go to sleep. It's saw 12 o'clock. They do some automatic updates, but we will presume. So talking about the state of Tesla, again, from my position, and again, this is not financial advice by any way, shape or means. This counts as educational material, educational content, traders sharing with traders. But from my perspective, considering everything, Tesla is at extremely undervalued, right? There's a lot of room for upside movements. So again, looking at the price action, we can still see that even if we just consider this bear move here, no matter how you want to draw it out, even if you want to be super conservative and you want to, utilize that as your resistance level in terms of the market structure, even in that case, we are currently in a breakout situation for Tesla. Okay. Also important to understand, it is after hours, meaning if you try and open up a trade here, you're not going to be able to open up anything, right? You're going to see waiting for an update. So that's why a lot of these companies essentially give their earnings after New York Stock Exchange main session. Now, for those of us who aren't buying the individual shares, who are buying CFDs, because that's what we're doing, that session is closed off to us, and we can only trade when the New York Stock Exchange opens up tomorrow afternoon at 4:30. But we can set up, we can prepare, we can listen to the earnings call, anticipate what's going to end up happening, and as soon as the New York Stock Exchange opens up tomorrow evening, we can place our orders in, and we can essentially get long on that, provided the earnings call is positive. Okay, so that's something important to understand. So from a price action perspective, Tesla is right for the picking, perfectly situated for a bit of a breakout there. I was fairly disappointed in the last round. We had the earnings call, the data was positive, we had that market structure, we were sitting in that position, and it just, markets wouldn't do it. At that point in time, Tesla, or Elon specifically, just bought or made the acquisition or made attempts to acquire Twitter, and that just didn't sit well with shareholders. So Sana's asking, what lot size would one use? So when it comes to Tesla stock, it's going to depend on your platform, but if you are a Globex 360 live account holder or Globex 360 live client, it is going to chew up some margin, right? So I mean, even taking out a one lot position, it is going to consume margin, right? Of a lot more margin than what you may use, let's say, on a currency or on indices. However, these are the type of things that can become swing trades and can move long term. And as Asan says, the last time we did this, we made some good money on it, right? So I will be advising tomorrow afternoon. As I'm saying, a standard lot can represent about $18,000. So this is not for, small accounts. It's not for $100 accounts. Even $1,000, you would need to be fairly cautious in terms of what you open up. When is the next expected split? Keenan's asking. I don't know. I haven't followed up on that. Splits aren't always forecast. They're generally announced fairly soon before actual split itself, and that's where the board will essentially elect to say, hey, let's do a stock split. The value proposition is a little bit is available to do a stock split. So the frequencies do vary from time to time, and companies kind of can keep a price for 2 years and then do a split, keep it for 6 months and then do a split. Okay. All right, good stuff. Okay, so the price action says we're good. Again, it is fragmented. I know if you're seeing that for the first time, it can be a bit troublesome to obviously break down, but the price action's there. I do think Tesla's value proposition, in my personal opinion, again, that's not financial advice. It's merely my opinion. And again, everything we do here is for trading and educational purposes only. I have to say that, otherwise the lawyers will kick me in the teeth. Okay, so let's jump back into the data. And again, this is where we obviously have to understand where we are going. Aslam, you know how it is. We're going in hard and we're going in big. We have to go in big. I'm going in big tomorrow. Again, on the New York Stock Exchange Open, I have a fairly good idea of where I think Tesla's going to go. I think it's going to move after hours. Again, the big difference, the deciding factor is what Elon says. Right, it's great to listen into his thought process. He gets questioned, also just to add into the earnings call, because it is coming up in a bit. He gets questioned by outside investors, right? So you'll see hedge funds, you'll see big banks, the CEOs of those banks, the analysts of those banks will call in after Elon's spoken, and there'll be a Q&A. And that's where it can get quite spicy, because they will ask questions like, you know, do you think that your involvement in Twitter allows you to manage Tesla effectively? I mean, that could very well be a question that's thrown in, and then you've got to listen to his response, right? It's the same as sitting with shareholders around a table. They're going to ask certain questions. So again, we've got to be in a position to listen to that, interpret and hear what's happening. So we're going to listen to that call together. I'm going to stream the call as things are happening. I'm going to tell you, hey, this is important. Let's listen out. But again, you're going to get a great insight into these things, and it's happening live. Right, it's quite I feel privileged every time I listen in on these calls, because it's basically like having and being in a phone call with some of these people that we look up to as role models or titans of industry. Whether you like the guy or not, he's brilliant. You can't deny it. Vote 1 for Elon being should be the next president. Vote 2 if you don't like him. But I'd like to know your votes. Does everybody think Elon's an absolute machine, or do you guys think he's not? I'd love to know in your comments down below. Personally, I'm a supporter. I think the guy's absolutely brilliant. I will share with you guys a link tomorrow. Stuart's voting 3. I don't know what 3 stands for. I'm just going to trust you on that one. But in terms of, you know, his story, I'll share a link tomorrow about his story. You know, the reality is that, you know, every time he's hit a crossroad, any of the businesses, the amount of risk he's taken. If you guys understand his story, the bank was knocking on his door. They were launching the last rocket. 2 rockets have just blown up. They've just put in all their last money into this last rocket. The banks are knocking on his door saying, hey, we're going to take your stuff. Like, we need our money. And he's saying, I'll pay you tomorrow, no problem. Very well knowing if this rocket blows up, they're done. They finished. Everything is on the line. And that was for SpaceX. The same thing has happened with Tesla. The same thing happened with the former PayPal. Obviously, PayPal evolved in terms of what he started. You're just an absolute machine. Naeem's saying from a young age already he has shown what he can achieve. Absolutely. Mgezi saying, no man, he should be the CEO of Eskom. So do you guys know, just a side note, and sorry I'm getting a little bit off track here, but just something funny that we should all know, that someone asked him to please buy Eskom, right? Do you know what his response is? Does everyone know what his response is? Sana saying, number 2, he's a machine but arrogant. Yes, but you must also know that he has he is on the spectrum, right? So he has what's called Asperger's, which is a, you know, it's a, I don't know what the technical term is for that, but he's on the spectrum. So he really struggles with public speaking. He was bullied as a child because of it. And, you know, imagine going from that, having a shyness for people, for public speaking, for crowds, for environments, to being thrusted up to the wealthiest person on the planet. I think he can be a little bit arrogant. I think he's done and achieved some amazing things to be a little bit arrogant. I think maybe it's also a mask to try and obviously deal. Elon does the handwork so we can sit at home, make some money and trading his stocks. Yeah, so anyway, someone asked him to buy Eskom, and he said even if someone sold, even if they valued Eskom, even if they offered Eskom at 1 rand, he would not buy it. Yeah, that was his honest answer. Again, I can't confirm that's factual, but I'm pretty sure it was. There was a question posed that, you know, would you buy Eskom? And his response was, even if it was for 1 rand, I wouldn't buy it. David saying, president of ANC. Yeah, I don't know. Okay, so let's break down the rest of that data, guys. I got a bit sidetracked there. So again, this is a great report. Again, I've sent the links. I've pinned the first link. So the first link in the comments I've pinned. You can go ahead and access that. But just really, really valuable information. You definitely want to consider getting your hands on. Let's just break down some things really quickly. So we have automotive revenues. That's going to have of which regulatory credits, meaning money that comes back from government in terms of concessions for electric vehicles, whatever the case may be. Automotive gross profit, automotive gross margin, right? That comes into total revenue. Markets care about total revenues more than anything else. Again, margins are important. We do like to see margins climb. I don't know what the market was expecting in terms of this margin, because they only have a 25% margin. John Micketts is saying, he said, even if it's 1 rand, it's still overpriced. There we go. John, you got it nail on the head. I knew it was something like that. I kind of filled in the gaps in between, but you've got it right there. Beautiful stuff. So 25%, I don't know if that's missing expectation. It seems a bit low, but again, considering the economic climate, all the rest of that, that's still something pretty decent, meaning the gross margin across the board is 25%, which is massive. They have operating expenses, so that's going to be important to monitor to make sure that operating expenses don't increase, and adjusted EBITDA, and again, that's just going to be I'm not 100% sure what that stands for there, but they're essentially talking about margin again, and that's with an adjustment. So it's looking at automotive gross margin, and then there's going to be an adjustment. I think that might be accommodating for foreign currency exchanges. Net income attributed to common stock shareholders, that is going to be the net income, right? And then stockholders diluted. So if you're an actual shareholder, stockholder, right, that is going to be the 3.687, but the diluted, which means it's completely void of any negatives, void of any margins, meaning that what would be paid out, that is going to be what we look at in terms of diluted, EPS attributed, and that is going to be that $1.19, right? And we look at the non-GAAP, right? So $1.19. We have some net cash provided by operating activities, capital expenditure. Now, this is also interesting to look at, yeah, right? Net cash provided by operating activities. These numbers are in the billions, right? So if you're reading these numbers and you're reading 3.2, whatever, that's 3.2 billion, right? That is available in net cash. Right, capital expenditures 1.8 billion, free cash flow 1.4 billion in terms of free cash flow on hand, cash equivalents and investments. They currently have 22 billion on hand for that perspective. Now the next slide starts to give a little bit of a growth forecast, a little bit of a, how's Tesla doing? Because again, what you want to know about a stock is this thing going up or is it going down? So the financial summary year on year is obviously gross, is hugely important. There's an extra column at the end here, and that's just going to give the percentage year on year. So again, all the same figures, and it's essentially the growth. So what we're looking at here is we're looking at total revenue, right? And we're looking at that for each year, right, as a whole. So for 2018, they came in at 21 billion, 2019, 24 billion, 2020, 31 billion, 2021, 53 billion, and for the year ending 2022, they came in at 81 billion. Just think about that number. Write that number down on a piece of paper. It is insane, right? In terms of the year on year, right, the let's see, the total revenues have grown by 51%. Okay, that is massive. That is huge. Having a look at the EPS, right, there has been a growth. Previously, they had a 38 cents for 2019, 33 cents for, 38 cents for 2018, 33 cents 2019, 21 cents, I believe that's for 2020, $1.63 for 2021, and then $3.62 total for 2022. So again, that represents 122% growth in terms of that earnings per share. Those are going to be the big numbers, right? Where's Tesla going? What is it doing? And again, if you're part of the last Tesla earning call, again, Elon was highly confident, saying yes, there is headwinds, but we are opening new gigafactories. We are increasing and ramping up our new products, our new sales. And in the earnings call, you get a better understanding of what all is Tesla involved in, because it's not just building cars, right? It's involved in self-automated driving or fully automated driving, FAD, huge R&D, as obviously Asim has just pointed out. They're involved in a ton of things. They are producing lithium-ion batteries. They're considering mining lithium-ion themselves. Again, they have produced batteries at a far more efficient and at a bigger scale than actual companies that just specialize on producing batteries. And that's something to say, right? It's just a part of what it is that they do over and above AI, or over and above all these other things. Then in the summary behind us, you'll be able to read a little bit more in terms of what are the talking points. Total revenue grew 37% year on year in Q4 to 24.3 billion. And your revenue was impacted by the following things. And I can maybe zoom in on that one. There we go. Growth in vehicle deliveries was a positive. Growth in other parts of the business, increasing ASAP year on year, including FX impact, including favorable impact of the model and regional mix. Negative impact of 1.4 billion, right? So negative FX impact, what you need to understand is Tesla is a global firm, right? So when they have these exchange rate differences, there can be a negative net impact on their business. As an example, if the dollar gets stronger, but they're selling in yuan or yen in Asian markets, right? They're essentially selling at a discounted rate, right? Because once that is paid for and once the money comes back into the US, they're essentially getting less and less dollars for the same amount of money. Okay, so again, that is something to consider. And that was something we heard from the last earnings call, was the negative impact from FX across the board. And this is where you get to go in and you really get to dive in. For those of you who are sort of going to a bit deeper detail from financials, if you guys are comfortable with financials, you can dive in and you can see different types of production levels, and where they are ramping up the most is going to be what's most important. Right, if we have a look at their model production, the 3 and the Y is their lowest cost vehicle, if you will. But the most important thing to note here is having a look at these total, let's just have a look here, the total production, right? That's that line over here by my mouse, and then the total deliveries. Right, because you can produce a ton, but if you can't get it out to market, if logistically it's not possible to get out to market, then there is a big problem there. Now, on all of these factors, we're seeing massive growth, right? Quarter 4 2022, 44% growth. Quarter 4, and that's on production. Quarter 4 2022 on deliveries, 31% growth, which is massive, which is major, right? The bigger number here, I do believe, is going to be sitting, let's see here, in the year-on-year growth, meaning quarter 4 to quarter 4, last year to this year, is probably definitely going to be the fact that they've grown 57% on production. So they've ramped up their production by 57%, and I think that's quite noteworthy. All right. Again, let's have a look here. They're also obviously deployed in the solar space. Another item that will be of consideration is how many supercharger points are being deployed and maintained. Because again, as you deploy this electric vehicle infrastructure, or electric vehicles, as you're deploying and selling more electric vehicles, you need to have infrastructure to essentially back them up and make sure that these vehicles are being serviced. Guys, really quickly, I can see that we have well over 60 people with us live right now. Smash that like button, right? Don't be a monitoring spirit. Smash that like button, comment, let us know where in the world you're joining us from. Don't be silent, don't be scared. Even if you're watching and you're lurking is a thing. Some people like to just stay there and just watch from a distance. Even if you're lurking, smash the like button, share the love, smash the subscribe button, and you never miss a brand new upload. Share the love, that's what it's all about. I know the team will obviously encourage you guys to do your thing, but don't hide, don't be shy. Smash the like button, get the likes up. So what we're going to do really quickly is we're going to take a quick intermission, going to change in some batteries, and then what we're going to do is we'll do maybe a 5-minute intermission, and we will then start to listen on that earnings call exactly at 12:30. So I'm going to switch in for a 5-minute intermission. You guys go walk around, take a cup of coffee, do whatever you got to do. We'll be back in 5 minutes. Then we're going to listen in on that earnings call together. I'm going to make some coffee. I'll be with you guys right now. 5 minutes. Let's go. Okay, good stuff. There we go. I didn't break anything. That's a win. That's a win. Right, let's check. Has everyone got the likes up here? Let's have a look. Everyone jumped in, subscribed. Oh, I see we got some subscribers jumping in. Some Kelso, thank you for jumping in and subscribing, becoming new to the family. 5 accounts. That's massive. Hold trades for weeks. I take long trades, different accounts. Yeah, absolutely. Okay, beautiful stuff, guys. I think can everyone see me, hear me? I didn't break anything in the break, in the intermission. I tend to break something. Just a quick one. Just make sure everybody can hear and see and do their thing. Okay, good stuff. All right, so just continue just before I broke the seal of my bladder. Okay, just before we get into the earnings call, right, I just want to go over one last chart, and that is going over the market share of Tesla vehicles by region, right? And again, this is something important to look at. And again, for anybody that's used to charts, it's important to look at, you know, where Tesla is. They haven't even begun to start ramping up, and to see these types of curves over 2022, and especially looking at some of their newer vehicles and where they are breaking through. Obviously in Europe, in the US, Canada, that's obviously big, but making inroads into China with the green, that is obviously massive, right? So again, Tesla is on the up and up in terms of where they are going. And then the amount of full self-driving miles done in beta from a millions perspective, you know, they've got 90 million miles being driven in their full self-driving mode. That is definitely the future. They're definitely the leaders in that space. Miles driven per accident in millions, meaning they in some cases in Q1 2022 over 6 million miles driven, 6 million miles per incident, per accident, right? Meaning 6 million miles driven accumulatively per accident, which is obviously massive. I think that's huge. It's obviously massive. It's energy storage. There's a bunch of other things you can go through in terms of supercharging locations. That is also ramping up exponentially and definitely worthwhile to consider. They've added some pictures in here for those of you who want to just look at a little bit more of what it looks like inside of Tesla's Gigafactory, some of their developments, how they build their vehicles, their facilities, which are absolutely insane. Again, their trucks that are also coming to markets, their new battery technology. It's just mad. It's massive, right? So again, that's the earnings deck. We will be hearing that earnings deck and be going through it as Elon speaks through. So again, we are getting that earnings call coming up in the next 2 minutes and 50 odd seconds. It's important to note the earnings call can be anywhere from 30 minutes to an hour, right? So I completely understand if, you know, maybe you're tired or you drop off or your internet or load shedding for whatever reason. If you drop off, it's not the end of the world. I will summarize tomorrow. However, there's going to be a lot of information you definitely want to be hearing from Elon himself, as well as the team, some of the questions and answers. You're always going to get a lot more in the earnings call than you'll ever get in any news updates. Will this have an effect on NASDAQ? Wayne's asking. Not 100%. As we saw, NASDAQ today struggled a little bit from Microsoft's data. However, Tesla is not a part of the NASDAQ, right? NASDAQ is only tech businesses and isn't a composite of NASDAQ. The last time I checked, it is in the US 30 as well as the S&P 500. NASDAQ struggled this afternoon, again yesterday afternoon technically, because of that Microsoft expectation, or at least the earnings call being slightly negative. Again, we are going to be trading the actual Tesla stock as markets open for the New York Stock Exchange tomorrow afternoon. Tomorrow afternoon is going to be a big one. We're going to redeploy the strategy in terms of the hack for US City. We got it right this afternoon. US City pushed beautifully towards the downside, but then had a recovery later on in after hours. If you had a trailing stop involved, even if you just took profit at 1,200, 1,300 pips, you should be smiling. But we are going to repeat this exercise and continue to smash pips in terms of our dollars for lunch. We will obviously open up on that Tesla trade and see if we can trade the gap in terms of a continuation to the top side, provided the earnings call that's happening in the next 1 minute on the dot is positive. So sit back, relax, grab some coffee. I just grabbed some super strong coffee for this one, and prepare to listen in. I will be sharing and we'll be pausing when there's something super important and maybe update you. But for the time being, all we need to do now is sit back, relax, and simply just listen in to what is happening in terms of that earnings call itself. So let's just go ahead and find that earnings call really quickly. Okay, so not yet live. And once they do go live, we'll obviously jump in and listen in on that. Okay, brilliant. Any last questions? It shot to the moon this evening, both US30 and NASDAQ. Yeah, 100%. All went through the moon. Lesejo, some of yens midnight before pounds for breakfast. Some yens before midnight. Absolutely. You guys know the vision in terms of where we want to go. We are going to move into space somewhere in the course of this year. God willing, where that happens, we don't know, but we obviously working super hard, praying for that we will have a broadcast from 8 a.m. to close of markets, right? Different presenters, different analysts, different specialists from around the world, the JSE, so on and so forth. So that's the goal. That's where we want to get to. We'll be able to transition into these new segments and into these different show times with different strategies for all. So that's where we want to be. As I'm saying, Globex 360 will be live 24/7. Man, that's the prayer, that's the vision, that's where we're going. That's why we're working as hard as we are. And again, your support and your love on this process helps us go the next distance, right? So any suggestions you may have, we welcome it. Drop it in the comments. I'll always read the comments afterwards, go through it and respond to as many people as I physically can, as well as our team that is watching in to help and support every single one of you. So you haven't already, one last reminder, smash the like button, smash the subscribe button. If you'd like to be an MVT and support the channel, down below is the join button. If you're on an Apple device, you may struggle, but yeah. Albima saying, create a Globex 360 channel on DSTV, just like Bloomberg Markets. I'm telling you, that's where we want to be. That's where we have to be. We want to be in a position where we can have Globex 360 streaming all around the world. Gawain saying, join is not available in my region. In some cases, if you are on a Apple device, it can give you that error. Otherwise, just take a screenshot of that error message. My direct link is down below. Gawain, you've got my details. Pop me a screenshot. I'll get it sorted out for you. Okay. Other than that, guys, yeah, pop your questions through. If there's anything extra you'd like to know, anything you'd like to ask, please go ahead and drop it in the questions. I'll try and get that answered just before we get this webinar going live, and we'll speak through it together. Let's have a look here. Okay, so we are going to switch over to the actual audio for the Tesla earnings call. It's a bit of weird, like trancey stuff. So yeah, just excuse. This isn't my audio. This is Tesla. Ritzlin saying, did you say the Tesla earnings can affect US30? Yeah, it can. A bit off track, but I noticed I don't have USD ZAR on my MT4 mobile app. So when you're searching and adding an instrument, you just have to look through the different categories or currency setup. So just to answer the question from Naeem about not seeing that on his MT4 mobile app, you simply want to go into your, my app decided to crash. You want to go plus, and then when it says find symbols, you just want to type in USD ZAR. Okay, switching over now. Let's listen in.
Were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Thank you, Martin. So just going through a 22 recap. It was a fantastic year for Tesla. It was our best year ever on every level. Team did an amazing job. It's an honor, of course, to work with such an incredibly talented group of people. So in 2022, we delivered over 1.3 million cars and achieved a 17% operating margin, the highest among any volume car maker. I think maybe among any car maker. While doing so, we generated $12.5 billion in net income and $7.5 billion in free cash flow. Importantly, the Tesla team achieved these records despite the fact that 2022 was an incredibly challenging year due to forced shutdowns, very high interest rates, and many delivery challenges. So it's worth noting that all these records were in the face of massive difficulties. A credit to the team for achieving that. The most common question we've been getting from investors is about demand. Thus far, so I want to put that concern to rest. Thus far in January, we've seen the strongest orders year to date than ever in our history. We currently are seeing orders at almost twice the rate of production. So I mean it's hard to say whether that will continue at twice the rate of production, but the orders are high, and we've actually raised the Model Y price a little bit in response to that. So we think demand will be good despite probably a contraction in the automotive market as a whole. Basically, price really matters. I think there's just a vast number of people that want to buy a Tesla car, but can't afford it, and so these price changes really make a difference for the average consumer. It's sometimes for people who are have a lot of money, they sort of forget about how important affordability is. And it's always been our goal at Tesla to make cars that are affordable to as many people as possible. So I'm glad that we're able to do so. So I think it's a good thing, all things considered. We're also making very good progress on cost control, and we're seeing the costs of production in Berlin and Austin drop commensurate with the growth in production, so as you'd expect. So, with respect to Autopilot, as of now, we deployed full self-driving beta for city streets to roughly 400,000 customers in North America. This is a huge milestone for autonomy, as FSD beta is the only way any consumer can actually test the latest AI-powered autonomy. And we're currently at about 100 million miles of FSD outside of highways. And our published data shows that improvement in safety statistics is very clear. We would not have released the FSD beta if the safety statistics were not excellent. Regarding batteries, production rate of 4680 cells reached 1,000 cars a week at the end of last year, and we're increasing capacity for 4680 cells by another 100 gigawatt hours, as announced at Giga Nevada yesterday. Our long-term goal is to get to well in excess of 1,000 gigawatt hours of cells produced internally, and continue to use other cell providers. So to be clear, we will continue to use other cell providers, just that the demand for lithium-ion batteries is quasi-infinite and will be for quite some time. So we feel we can scale a lot faster using both suppliers and internally produced cells. And we've got an amazing plan for making the 4680 cell low cost and high energy density. So energy storage also saw record growth. that is continuing to accelerate. It's always worth remembering that the three pillars of a sustainable energy future are obviously electric vehicles, solar and wind, and then the third key item is stationary storage to store the energy from solar and wind, because obviously the sun doesn't shine all the time and the wind doesn't blow all the time. So if you have those three things, you can convert all of Earth to a fully sustainable situation, many times over, actually. So I would like to just make it clear that there is a path to a fully sustainable future for humanity, and our goal at Tesla is to accelerate progress on that path as much as humanly possible. So so we're obviously ramping up megapack production, and we expect it to grow at a rate quite a bit faster than our vehicle output. So in conclusion, we're taking a view that we want to keep making and selling as many cars as we can. We believe we can keep pushing for strong volume growth while retaining the industry's best operating margins. As we mentioned many times before, we want to be the best manufacturer. But really, manufacturing technology will be our most important long-term strength. So, and we'll talk more about our upcoming plans at the March 1st Investor Day. And lastly, I want to once again thank all of our employees for delivering another record-breaking year. Congratulations, guys.
Thanks, Elon. And I think Zach has some opening remarks as well.
Yeah, thanks, Martin. So as Elon mentioned, 2022 was a terrific year for Tesla. I also want to congratulate the Tesla team and also say a thank you to our suppliers for your support during quite a volatile year. On a full year basis, revenue increased over 50%, operating income doubled, free cash flows increased over 50%, and our margins remained industry leading. Additionally, we continue to make progress on overhead efficiencies as non-GAAP OPEX as a percentage of revenue improved further. For Q4 specifically, sequential and annual margin was impacted by ASP reductions as we were managing through COVID impacts in China, uncertainty around the consumer tax credit in the US, and a rising interest rate environment. Note that in 2022, rising interest rates alone had effectively increased the price of our cars in the US by nearly 10%. Additionally, COGS per unit has increased on a year-over-year basis, driven primarily by three factors. First is raw materials and inflation led by lithium prices and discussed at length in previous calls. Second, we are working through the early ramp of inefficiencies of our Austin and Berlin and in-house cell production factories. Third, our vehicle mix over the last year has moved more heavily towards Model Y, which carries a slight cost premium to Model 3. Partially offsetting these impacts, we've continued to execute on Tesla controllable cost reductions in line with the progress we've made in prior years. These improvements include our continued work to gradually move towards a regionally balanced build of vehicles. The energy business had its strongest year yet across all metrics, led by steady improvement in both retail and commercial storage. While much work remains to grow this business and improve cost, we believe we are on a good trajectory. As we look towards 2023, we're moving forward aggressively, leveraging our strength and cost. There are three key points I wanted to make here. First, on demand, as Elon mentioned, customer interest in our products remains high. Second, on cost reduction, we're holding steady on our plans to rapidly increase volume while improving overhead efficiency, which is the most effective method to retain strength in our operating margins. In particular, we're accelerating improvements in our new factories in Austin, Berlin, and in-house cells, where inefficiencies are the highest. But we are attacking every other area of cost and unwinding cost increases created from multiple years of COVID-related instability. This includes logistics, expedites, accumulation of material buffers, part premiums, productivity, and overheads as an example. As the world transitions from an inflationary to deflationary environment, we expect a strong partnership with our suppliers on this journey as well. In net, we've priced our products with a view towards a longer-term cost structure. Thus, there will be an impact on operating margin in the near term. However, we believe our margins will remain healthy and industry-leading over the course of the year. Third, we are continuing to ensure funding is prioritized for our long-term roadmap. This includes expanding in-house cell production, bringing Cybertruck to market, development of our next-generation vehicle platform, expansion of our manufacturing footprint, and growth of the energy business. We're looking forward to discussing these plans in more detail on our Investor Day in a month. Thank you.
Thank you very much, Zach. Let's now go to investor questions. The first question is, some analysts are claiming that Tesla orders net of cancellations came in at a rate less than half of production in the fourth quarter. This has raised demand concerns. Can you elaborate on order trends so far this year and how they compare to current production rates? I think
we've already answered that question.
Yes, exactly.
The demand far exceeds production, and we actually are making some small price increases as a result.
Thank you. The second question is in similar vein. What is the initial reaction been to global price reductions in early 1Q 2023, specifically in terms of order intake levels? We've answered that one as well.
Yeah.
So let's go to the next one. The next investor question is, will Tesla be able to take full advantage of advanced manufacturing production credits for battery cells packs? So $3,700 per long-range Model 3 and Model Y. It's $45 a kilowatt hour. For autos and energy products, and how much does Tesla expect to earn in the coming year from these credits?
I'll say a little bit about it, and I think Zach will add some. Long term, we expect these the value of these credits to be very significant. You can do the math. If we were to get anywhere near 1,000 gigawatt hours a year of production, or even a few hundred gigawatt hours, it's very significant. So, but the credits do rely upon domestic manufacturing, and in the case of Panasonic, with domestic manufacturing, we're splitting the value of the credits. So the value of the credits this year will not be gigantic, but I think it could be gigantic in the future. We think it probably will be very significant in the future.
Yeah, just to add and put some boundaries on what we're expecting in terms of impact to Tesla for this year. So different products we think will get different amounts of credit. The regulations here are still in flux, and there continues to be updates. So this is just our best understanding at the moment. But we think on the order of 150 million to 250 million per quarter this year, and growing over the course of the year as our volumes grow. And part of the work we're doing here, which is part of what this incentive package is trying to incentivize, is, as Elon mentioned, to move more manufacturing onshore in the United States, which is Tesla's plans anyways. And so I think we're pretty well positioned over the coming years to take advantage of this. But then also, part of what the goal of this incentive package is to improve adoption from our customers. And so we also want to use these incentives to improve affordability as we think about what the price points are on our products going forward. And so as we were thinking about our pricing changes in the US a couple of weeks ago that we announced, we were looking at what the credit benefit to Tesla would be to make sure that customers are able to receive the benefit not only from this that we're receiving to some extent, but also on the consumer-facing side, which is currently $7,500 per car of tax credit, assuming that subject to the MSRP caps and the income caps. So we want to use this to accelerate sustainable energy, which is our mission and also the goal of this bill.
Thank you very much. The next question from investors is, after recent price cuts, analysts released expectations that Tesla automotive gross margin excluding leasing and credits will drop below 20%, an average selling price around $47,000 across all models. Where do you see average selling price and gross margins after the price cuts?
Yeah, go ahead.
Yeah, I'll jump in on this. So, there's certainly a lot of uncertainty about how the year will unfold, but I'll share what's in our current forecast for the moment. So, based upon these metrics here, we believe that we'll be above, both of the metrics that are stated in the question. So 20% automotive gross margin, excluding leases and red credits, and then 47K ASP across all models. And so, two other comments I want to make on this, just tactically on sequential ASP changes from Q4 to Q1. Just as a reminder, the ASP reduction is not as large as the reduction in configurator prices. As in Q4, we had backlog customers that we're delivering cars to at a lower price book, given that backlogs had been so long for so much of 2022. But then also there are various programs in place that we used in Q4 that lowered ASPs. The second comment I wanted to make here is that, as a management team here, we're most focused on what our operating margin is. And so, as other areas of the business become more important, particularly the energy business, which is growing faster than the vehicle business, and as we're heavily focused on operating leverage here, improving efficiency of our overheads, we think the right metric for us to be focused on is operating margin. And so I wanted to make sure that I shared that with the investor community as well, because that is what we're primarily managing to now.
Yes, something that I think some of the smart retail investors understand, but I think a lot of others maybe don't, is that every time we sell a car, it has the ability just from uploading software to have full self-driving enabled, and the full self-driving is obviously getting better very rapidly. That's actually a tremendous upside potential, because all of those cars, with a few exceptions, I mean, only a small percentage of cars don't have hardware 3. So that means that there's millions of cars where full self-driving can be sold at essentially 100% gross margin, and the value of FSD grows as the autonomous capability grows, and then when it becomes fully autonomous, that is a value increase in the fleet that might be the biggest asset value increase of anything in history. Yeah.
Thank you. Let's go to the next investor question. Since Elon started political influencing, polls from Morning Consult and YouGov show Tesla brand
you can crush them with your life.
Show Tesla brand favorability declining in 2022 and division among partisan lines. Such brand damage can impact demand. Does Tesla track favorability, and how will any brand damage be mitigated?
Well, let me check my Twitter account. Okay, so I've got 127 million followers. It continues to grow very rapidly. That suggests that I'm, reasonably popular. It might not be popular with some people, but for the vast majority of people, my follow account speaks for itself. I'm the most interactive account, social media account, I think, maybe in the world, certainly on Twitter. And that actually predated the Twitter acquisition. So I think Twitter is actually an incredibly powerful tool for driving demand for Tesla. And I would really encourage companies out there of all kinds, automotive or otherwise, to make more use of Twitter, and to use their Twitter accounts in ways that are interesting and informative, entertaining, and it will help them drive sales, just as it has with Tesla. The net value of Twitter, apart from a few people are complaining, is gigantic, obviously.
Thank you. Let's go to the next question. Please provide a detailed explanation of where you are on the 4680 ramp. What are the current roadblocks, and when do you expect to scale to 10,000 vehicles a week?
Yeah, thanks, Martin. First, I just want to say congrats and thanks to the Tesla 4680 team for achieving 1K a week in Q4. It was no small feat. Definitely a result of, more than a couple of years of hard work. As far as where we stand, in Texas, 1 of 4 lines are in production, with the remaining 3 in stages of commissioning and install. Really, our 2023 goal as a 4680 team is to deliver a cost-effective ramp of 4680s well ahead of Cybertruck. Focus areas are dialing in and improving the quality of the high-volume supply of mechanical parts and driving factory process yields up as much as possible. Between the two of those things, if we achieve those key goals, we'll be well set up for a major 4680 year in 2024.
Thank you. Next investor question is, Elon said previously that FSD Hardware 4 will most likely come first in Cybertruck. Is that still the current plan? Do you expect there to be an upgrade path for Hardware 3 cars to Hardware 4?
Yeah, Cybertruck will have Hardware 4, and typically, for 2023, Cybertruck will not be, a significant contributor to the bottom line, but it will be in next year. So it's an incredible product. I can't wait to drive it personally. It will be the car that I drive every day. Actually, I'm wearing the T-shirt with the smashed glass. It's just one of those products that only comes along once in a while, and it's really special. So, yeah. So, with respect to upgrading cars that have Hardware 3, I don't think that will be needed. Hardware 3 will not be as good as Hardware 4, but I'm confident that Hardware 3 will still far exceed the safety of the average human. So what we're aiming for is well, how do we get ultimately to, let's say for argument's sake, if Hardware 3 can be, say, 200 or 300% safer than human, Hardware 4 might be, 500 or 600%. There will be a Hardware 5 beyond that. But what really matters is are we improving the average safety on the road? But it is the cost and difficulty of retrofitting Hardware 3 with Hardware 4 is quite significant. So it would not be, I think, economically feasible to do so.
Thank you. The next question is for Zach. Zach, when do you think Tesla insurance will become big enough revenue source to warrant providing more details in the financials of the business so investors can compare it to other insurance companies?
Yeah, I think it's probably going to take some time before this business is large enough for specific financial disclosures. But I'm happy to provide an update on where we stand in the business. So we're currently at a $300 million annual premium run rate as of the end of last year. We're growing 20% a quarter, so it's growing faster than the growth in our vehicle business. And in the states in which we're operating, on average, 17% of the customers in those states are using a Tesla insurance product. So and that number continues to tick up as we spend more time in markets. And we see most of the adoption occurring when folks take delivery of a new car as they're setting up insurance for the first time, as opposed to going back and switching when they already have insurance set up. So there's an inherent stickiness in the insurance business. But
yeah. Sorry, go ahead.
No, I was just going to say, just as a broader reminder on kind of the motivation for starting this business, it was to improve, and still is, to improve the total cost of ownership of our cars, given that we're seeing high premiums of insurance from third-party companies. And that remains our priority here. We'll obviously run this as a healthy business, but we want to make sure we keep our costs low and insurance stays affordable to our customers.
Yeah, and so there are two really important side benefits for Tesla insurance that are worth mentioning, one of which Zach alluded to, which is that just by Tesla offering insurance for our cars at a competitive rate, that makes the other car insurance companies offer better rates for Teslas. So it has a bigger effect than you'd think, because it improves total cost of ownership or insurance costs even when they don't use Tesla insurance, because now the Geicos of the world have to compete with Tesla and cannot charge outrageous insurance for Teslas. So it's great. So it has an amplified effect, very important. Then it is also giving us a good feedback loop into minimizing the cost of repair of Teslas for all Teslas worldwide. Because we obviously want to minimize the cost of repairing a Tesla if it's in a collision, and for Tesla insurance. And previously we didn't actually have good insight into that because the other insurance companies would cover the cost. And actually the costs in some cases were unreasonably high. So we've actually adjusted the design of the car and made changes in the software of the car to minimize the cost of repair. Obviously minimize, first, the best repair is no repair. Avoid the accident entirely, which since every Tesla comes with the most advanced active safety in the world, whether or not you buy full self-driving, you still get the intelligence of full self-driving for active safety, active collision prevention. So it's giving us this really good feedback loop for, again, reducing total cost of ownership, and also just figuring out how to get, if somebody's car is in an accident. Most accidents are actually small. They're like, a broken fender or scratched side of the car or something like that. They're not, that's the vast majority of accidents. But we're actually solving how to get somebody's car repaired very quickly and efficiently and back in their hands. And like I said, those improvements actually apply then to all cars. And like we're making, just to emphasize another key point, because some of these points might be lost, so I apologize for being repetitive, but it's remarkable how small changes in design of the bumper and improving the logistics of providing spare parts needed for collision repair have an enormous effect on the repair cost. So if you're waiting for a part to get repaired and that part takes a month, now you've got a month of having to rent another car. It's very extremely expensive, and of course you're missing the car that you love and actually want to drive. So this is actually a very significant effect on total cost of ownership and customer happiness. Thank you.
The next question from investors is Cybertruck production still on track for mid-year?
We do expect production to start, I don't know, maybe sometime this summer. But I always like try to downplay the start of production, because the start of production is always very slow. But it increases exponentially, but it's always very slow at first. So I wouldn't put too much stock in start of production. It's kind of when does volume production actually happen, and that's next year.
Thank you.
Yeah, that's right, Elon. Like, just to emphasize on that, we've started installation of all the production equipment here in Giga, Texas. Castings, GA, general assembly, body shops. We built all our beta vehicles, some more coming still in the next months, but as you said, the ramp will really come 2024.
Yeah, exactly.
Thank you. And the last investor question is, with near infinite global demand for energy storage,
yeah, seriously,
where should Tesla build the next megapack factories? How many are needed on each continent?
It's a good question. It's not something I think we'll provide an update about that in the future, but it's something we're thinking about very carefully. Really kind of like, what is the fastest path to 1,000 gigawatt hours a year of production? You'll see announcements come out later this year and next that answer that question.
Thank you. Okay, and now let's go to analyst questions. The first analyst question comes from Rod Lash from Wolfe Research. Rod, feel free to unmute your mic.
I think I'm unmuted. Can you hear me?
Yes, we can.
Okay, thank you. Firstly, it sounds like your 1.8 million unit volume indication for this year is somewhat more supply constrained and demand constrained. Then I have a follow-up on cost, but is that an accurate statement?
Well, Okay, I mean, our internal production potential is actually closer to 2 million vehicles, but we, we're saying 1.8 because, I don't know, there just always seems to be some friggin' force majeure thing that happens somewhere on Earth. And, we don't control if there's like earthquakes, tsunamis, wars, pandemics, etc. So, if it's a smooth year, actually, without some big supply chain interruption or massive problem, we actually have the potential to do 2 million cars this year. We're not committing to that, but I'm just saying that's the potential. So, and I think there would be demand for that too.
Yeah, thanks for clarifying that. And on the cost side, the numbers that we just saw from you, as you pointed out, were weighed down by the 4860 ramp, the Berlin, Austin, gigacastings processes not at rate. Can you give us a bit of an indication of the headwind that you're absorbing from those things, like you did last quarter? And then lastly, on cost, do you think that we can tease out an interesting data point from on where battery costs are headed from this announcement that you just made last night? If I'm correct, it looks like the investment cost per kilowatt hour is less than half of what I've seen anywhere else, maybe $30 a kilowatt hour for that capacity.
I don't think we want to say the specific number, but it's interesting if you look at the size of Giga Nevada that is allocated to make 100 gigawatt hours is a small fraction of the size that currently makes about 35.
Yeah, I mean, the goals we outlaid at Battery Day on reducing the investment required to deploy cell manufacturing, I mean, that's been a key focus of ours, and the team is doing a good job hitting the marks on that focus.
Yeah, and it goes back to the point I was making, and I said this several years ago. I think Tesla's really the competitive strength that will be by far the hardest for other companies to replicate is Tesla being just damn good at manufacturing and having the most advanced manufacturing technology in the world. And if you've got that sort of advanced manufacturing toolbox, you can apply it to many things, and we're applying it now to battery cells. I should also say that we have other products in development. We're not going to announce them, obviously, but they're very exciting, and I think we'll blow people's minds when we reveal them. Tesla has the most exciting product roadmap of any company on Earth by a long shot, and we'll continue to, I think, be in that position. We got more great ideas than we know what to do with here. So the future is very exciting. As I said in the last call, there's going to be bumps along the way, and I think we'll probably have a pretty difficult recession this year. Probably, I hope not, but probably. And so one can't predict the short-term sort of stock value because when there's a recession and people panic in the stock market, then prices of stocks, or the value of stocks can drop sometimes to surprisingly low levels. But long term, I am convinced that Tesla will be the most valuable company on Earth.
Thank you. And I think, Zach, there was a question on cost headwind in Q4.
Yeah. I mean, our weighted average COGS for the company, if you were to assume Austin and Berlin were at the cost structure of our other factories, it was on the order of 2,000 to 2,500 of headwinds. So I think from there you can back into margin impact of those factories as of end of Q4.
Thank you very much. And let's go to the next question from Pierre Ferragu from New Street Research. Pierre, please go ahead.
Thanks, Martin. Can you hear me well?
Yes.
Yeah. Excellent. Zach, I'd like to follow up on the data point you just gave on cost. if I look back at the COGS per car, you guys bottomed close to $36,000 in the middle of 2021. And then the number went up as you had to face with inflation in input costs and the ramp of Berlin and Texas. And this quarter, I think we are close to 40K, and we peaked maybe close to $42,000 at some point last year. And so my question from here is, how much time do you think it takes you to get back to this kind of 36K, which would mean, you know, Berlin and Texas and like the input cost, all that stuff is normalizing. Is that like, and that would be like a kind of like a 10% decline in the COGS per car. Is that something we can hope to see this year, or is that too optimistic?
You know, the Austin and Berlin ramp in efficiencies in 4680 will make a substantial amount of progress on that over the course of the year, and that's within Tesla's control. We're doing a lot of work on cost reduction outside of that. We talked about supply chain costs, expedites, logistics, attacking everything. You know, on the raw materials and inflation side, where lithium is the large driver there, and this was a meaningful source of cost increase for us, you know, we'll have to see where lithium prices go. And, you know, we're not fully exposed to lithium prices, but I think in general, is what we've seen from our forecast here, cost per car of lithium in 2023 will be higher than 2022. So, you know, that's a headwind that would have to be overcome to return back to those levels. So I don't think we'll get there this year, but I think we'll make progress. And we'll continue to find ways to offset these raw material costs that we don't have control over. Is there anything on that?
Yeah, like on the non-cells raw material, we begin to capture, you know, benefits of indexes tapering off. But due to the length of various supply chains, it does take time before this is reflected in our financials. And while aluminum is down like 20% year over year, steel is about 30% down year over year. The global non-cells raw materials market continues to be influenced by geopolitical situations in Europe, high production costs due to labor cost increases and energy spikes, and disruptions due to natural disasters like typhoon in Korea 4 months ago, pandemic lockdowns. So we believe that meaningful price corrections will ultimately come, but it remains uncertain exactly when. In the meantime, we continue to redesign supply chain to make it more efficient and work with our supplier partners to find more efficiencies, streamline logistics and transportation to reduce costs.
Excellent, thank you. And I have a quick...
Sorry, you wanted to say something?
I was just going to say, we're also, you know, our fleet is starting to mature, the 3Y fleet, and we're gathering a lot of data out of that fleet to understand how we can sort of bring some margin that we didn't know we had out of the product. So over the course of 2023 on the powertrain side, we're actually going to go after sort of some materials where we're paying for more performance than we need, or we have more content than we need without impacting reliability at all. And you know, that will actually add up to a pretty significant cost reduction on the powertrain side over the course of 2023. So we're not just sort of relying on supply. We're also doing design actions to bring cost out.
Yeah, and my guess is if there is if the recession is a serious one, and I think it probably will be, but I hope it isn't. That would lead to meaningful decreases in almost all of our input costs. So I would expect to see deflation in our input costs most likely, which would then lead to better margins. I'm just guessing here. So this is, but that would be my guess.
Excellent. Thank you so much. So as a quick follow-up, Elon, I was thinking about like FSD, and when you look at like the situation today compared to a year ago, it's like the progress has been like amazing in the quality of the product, but also its rollout. And so I was wondering, how much is this like impacting the take rate of FSD today? So do you already see that people are getting more excited by FSD because they see it around them on 400,000 cars and they see the value of the service already? Or is that too early to really see like to expect like an uptick in the take rate?
The trend is very strong towards use of FSD, and as you allude to, with each incremental improvement, the enthusiasm obviously increases, I think something that still a lot of people out there don't quite appreciate is that Tesla. I've always said, like, Tesla is as much a software company as a hardware company, but Tesla is really one of the world's leading AI companies. This is kind of a big deal, both AI on the software side and on the hardware side. With the hardware 3 inference computer, still the most efficient inference computer in the world, despite being at this point 5 years old from the design point. And with hardware 4 coming, and then hardware 5 beyond that, where there are significant leaps. The Dojo computer, we expect to be using that operationally at Tesla later this year. We're seeing just a lot of world-class AI talent join the company. There's also the long-term potential of Optimus, where we're able to use our expertise in electric motors and power electronics, batteries, and advanced manufacturing to be able to make a humanoid robot that is actually useful and can be made at high volume with exceptional capabilities because of the autopilot AI that where we take because the car is like a robot on 4 wheels and the Optimus is a robot on legs. But as we get closer and closer to solving real world AI, and we don't see anyone even close to us in achieving this, the value. Pierre, I think you appreciate this, and a few others do, but most don't know what I'm talking about. So, but this is the thing that has order of magnitude potential market cap improvement for Tesla.
Thank you. And the next question comes from Alex Potter from Piper Sandler.
Can you hear me, guys?
Yeah.
Yes.
Okay, great. So quick one on FSD. This, I guess, for Zach. Obviously, you unlocked some deferred revenue in the quarter that'll translate presumably into higher margins on every incremental sale going forward, so long as people opt in for FSD. But was wondering if you're able to disclose the percentage of the $15,000 price that you're now going to be able to recognize as revenue up front rather than deferred.
Yeah, I mean, the way that we've structured this is a full self-driving package is 2 components. There's enhanced autopilot, the price of which is listed on the website. We fully recognize that. Then there's an incremental, which is for the additional features that full self-driving offers. And we've released a portion of that. And then there's a minority of the total package that's remaining that will be released over time as software updates are there. And in our shareholder letter, in addition to disclosing the dollar amount of the deferred revenue release, we also included in there the dollar value of the balance of unreleased deferred revenue that will be released over time with future software updates.
Okay, great. And then maybe one additional question here on the incremental capacity in Nevada, the 4680s that you're planning. It's a lot of batteries, obviously, and presumably you won't be putting all of those in Tesla Semi. So I guess 2 questions about that incremental capacity. First, is it correct to assume that all of those 4680s are going to be more or less fungible and usable in your entire range of products? And if the answer is yes, then if you had to guess, how do you think that 100 gigawatt hours would be allocated between your various end markets?
I don't know. This is a bit too much guessing at this point.
Yeah.
But
I mean, you're right. Not all of the 100 gigawatt hours are going to go into the semi trucks. That is correct. I mean, we can.
Let's say, like, I alluded to, a number of future products. Those future products would use the 4680.
Thank you. And the next question comes from George from Canaccord Research.
Hi, everyone. Thanks for taking my question. So you recently adjusted prices, and that may have put many of your competitors in the back foot. In addition to that, capital markets have recently gotten a lot tougher. So with those factors in mind, I'm curious how you see the current competitive landscape changing over the next few years, and who you see as your chief competitors 5 years from now.
Well, 5 years. 5 years is a long time. I was with the Tesla Autopilot AI team until late last night, and we're just asking. I was just like, so who do we think is close to Tesla for a general solution for self-driving, and we still don't even know really who would even be a distant second. So yeah, it really seems like we're. Right now, I don't think you could see second place with a telescope. So, or at least we can't. That won't last forever. So, in 5 years, I don't know. Probably somebody has figured it out. I don't think it's any of the car companies that we're aware of. But I'm just guessing that someone might figure it out eventually. So, yeah.
I mean, beyond that, Elon, like in the vehicle space, even though the market's shrinking, we're growing, and EVs have doubled almost year over year. So, like, whoever keeps up with the trend of EVs is going to be our competitor. And the Chinese are scary. We always say that. But like. A lot of people always look at the EV market share, but we always look at it as how much of the total vehicle space do we have, and we're just going to keep growing in that space. There's 95% for us to go get.
Yeah, and I don't want to say like I think we have a lot of respect for the car companies in China. They are the most competitive in the world. That is our experience, and the Chinese market is the most competitive. They work the hardest and they work the smartest. So a lot of respect for the China car companies that we're competing against. So if I were to guess, it would probably be some company out of China is the most likely, to be second, to Tesla. But we are the Tesla China team is winning in China. And I think we actually are able to attract the best talent in China. So hopefully that continues. So yeah, super fired up about the future, and yeah, well, it's going to be great.
Just as a follow-up, the Inflation Reduction Act has created huge tax incentives for commercial vehicles. You mentioned an incredibly interesting product pipeline. Are there maybe some plans to accelerate commercial vehicle form factors outside of the Tesla Semi to help accelerate EV adoption?
Well, I was basically saying that, yes, but I'm not going to give you details because this is nice try. Yeah, of course. So, we have to always look at like what is the limiting factor for new vehicles, because if for the longest time we've been constrained on total cell, lithium-ion production output, and so people say like, why not bring this other car to market or that other car to market? Well, it doesn't really help if all you're doing is shuffling around the batteries from one car to another. In fact, it hurts because you add complexity, but you don't add incremental volume. So it's sort of pointless. In fact, counterproductive to add model complexity without solving the availability of lithium-ion batteries. So as we get, we want a new product introduction to match where the cells are available for that new product to use those cells without cannibalizing the cells of the other cars. That's the actual limiting factor for new models, not anything else really.
Thank you. Let's go to the next question. The next question comes from William Stein from Truist.
Great. Thanks for taking my question. Elon, you started to answer this earlier, but I like to ask this question about the AI elements of your business and ask if you could comment on progress around Dojo and Optimus and your anticipation for the likelihood, for example, for the company to disconnect the GPU cluster in favor of Dojo and to have some market achievement in Optimus?
Yeah, I mean, obviously, since we're still at the early stages, there are big error bars in any predictions. So it's like easy to predict the long term, but hard to predict the time in between now and then. But we think Dojo will be competitive with the NVIDIA H1 at the end of this year, and then hopefully surpass it next year. The key there is like I think what's the energy usage required for a given amount of if you're training a frame of video, what's the energy cost required to do that training? We think probably we said this already actually at AI Day 2, so it's not new information, but we do see potential for an order of magnitude improvement relative to GPU, what GPUs can do for Dojo, which is obviously very specialized for AI training. It's hyper specialized for AI training. So wouldn't be great for other things, but it should be extremely good for AI training. So just like if you do an ASIC for something, it's going to be better than a CPU. This is sort of in some ways like a giant ASIC, and we're able to. Since we're operating one of the biggest GPU clusters in the world already, we've got a good sense of how efficient the GPU clusters operate and what Dojo needs to do in order to be competitive. But we think that it does have a fundamental architectural advantage because it's designed not to be the GPU is trying to do many things for many people. They're trying to do graphics, video games. It's doing crypto mining. It's doing a lot of things. Dojo is doing one thing, and that is training. And we're also optimizing the low-level software so that it at a very sort of bare metal level. So it's just insanely good at efficient training. And the intercommunication between the Dojo modules is extremely high. You're not going across an Ethernet cable. It's like, so anyway, we see a path to an order of magnitude improvement in the energy efficiency per given unit of training. But we also have to achieve that, and so that when will it be achieved? It's hard to say, but we do see a path to get there. And then also in inference, like once you've got something trained, well, if you want to have a product, that's a consequence of that training, and that product may not be anything to do with cars, then the efficiency of inference is extremely important. And so we also have by far the most efficient inference computer with the FSD computer in the car. This has potential for products that aren't even really in automotive.
Thank you. William, do you have a follow-up?
Yeah, it sounds like the 1.8 million units you expect this year is supply, not demand limited supply. It sounds like by the lithium batteries. If you were to become demand limited, can you talk to us about your propensity to use price, and and your relatively high industry margins to grow units and share?
Yeah. To be clear, the 1.8 million is not cell supply limited. We did address that number earlier in the call. I don't know if you want to answer.
Yeah, it's roughly, a cell supply is roughly matched with that, and it's 1.8 million cars. If we get lucky, it could be more, and then the rest would go into stationary storage, the Powerwall and Megapack. True.
Okay, let's have the final question from Adam Jonas.
Hi, Elon. First question is it time for Tesla to significantly expand the captive FinCo? I mean, you only have like $4.5 billion of base receivables. It's basically nothing compared to other big auto companies. Then I have a follow-up.
Zach, maybe best to answer that.
Yeah, I mean, the way that we've been using captive financing so far is to plug what we believe to be gaps in the market of existing third-party products. And so we have a couple of offerings in Europe. We do loans for energy business, retail energy business here in the US. We do leasing, and we do a small amount of US loans that are very targeted. And so we're using captives to support market gaps, as I mentioned. So basically as a vehicle to support vehicle sales, make sure customers have access. I do think there's opportunity here to continue to grow this. We are growing it slowly here. It is a consumer of cash, so we're being cautious on how we do that. But the plumbing is in place to do a lot more here. And I think we'll have to see how things unfold over the course of the year and make decisions real time as to how much we ramp it up versus ramp it back.
I think if we see a severe recession this year, which, like I said, hopefully we don't. In severe recessions, cash is king big time because it's in such short supply. So we want to be cautious about using cash for loans and that sort of thing for cars. I feel we're in a very strong position to get through a recession because we really don't have any debt, and we've got over $20 billion of cash, which is great. Actually, the cash is earning a ridiculous return, not a good return. So it's like non-trivial. The interest rate actually means the 20 billion is earning like quite a good amount. I've made this point on Twitter a few times, and I'm sure a lot of people on this call understand the basic value of a security is a function of the risk-free rate, or we'll see how risk-free it really is, but of the T-bill rate. So if you've got, I think if I recall correctly, the S&P 500 has a long-term rate of return of roughly 6%. And so I think the Fed needs to be very cautious about having a Fed rate that potentially exceeds 6%. If we see deflation, and I think we are seeing deflation, then you would add the deflation number to the in quotes risk-free rate from the Fed, and as that starts to exceed 6%, now you're starting to exceed the long-term return of the S&P 500, and it starts to become questionable as to why not just put your money in T-bills or a savings account essentially instead of in the S&P 500 if the S&P 500 is variable and the bank interest rate is not. This is so basically the Fed is at risk of crushing the value of all equities. This is quite a serious danger.
Thanks, Elon. And just a follow up. I don't want to steal thunder from March 1st down in Austin, but how close are we to that step change improvement in BOM cost, where you could sell an EV for under 25 or 30,000 bucks and actually generate a profit? That kind of real moving assembly line moment in manufacturing. Again, don't want to steal the thunder, but just if you wanted to kind of wrap up with thoughts there, that'd be helpful.
Oh, man.
Thanks, Elon.
I mean, I'd love to answer. If I were you, I'd probably be asking the same question, but we would be jumping the gun on future announcements.
Fantastic. Thank you very much, everyone, for all your good questions, and we will see you again in 3 months' time.
Thank you.
Thank you. Bye-bye.
Okay. Amazing human beings. All right, so it's a wrap. We've listened in what's happened, and guys, all the questions that were thrown to Elon, spot on, perfect. Yes, he struggles to articulate himself. I don't know, it just makes me love the guy even more. It's just, how he's goofy about it. But yes, everything was positive. He navigated the recession thing, and I believe there's a couple key things we need to just wrap up with, right? First things first is his statement, his very bold statement about believing that Tesla will become the most valuable company on earth, right? Now, making a statement like that, right, you've got to back that up. You got to know your data. You got to know where you're going. You got to know what products are on the line to back that up. Full self-driving coming to an effect, and its incremental stages and upgrades, you were saying, is one of the biggest ROIs, one of the biggest changes in equity value. There is nothing else like it in the world, and it makes sense, right? Because as the self-driving that is deployed in the current 400,000 vehicles in the US, as soon as they make incremental level upgrades to what that self-driving capacity means and the safety levels, it rolls out against their whole fleet. And it's immediate upgrade in real time. It's not taking customers time to buy it and jump into it. It's a full-on upgrade. In addition to that, he's navigated and also dropped some nuggets about, he said there's very likely to become, there is going to be a recession, and there's a probability of being a very bad one, and he thinks it's going to be a bad one. Remember that. Right? Meaning the US, from a data perspective, is in recession, and he's still saying it is going to still get pretty bad. Meaning the ripple effect throughout is going to be quite serious. With that being said, he's made that statement well knowing and giving us an indication he understands 2023 is going to be a difficult year to navigate, but still hugely optimistic about Tesla's performance and outcomes within that environment. So he's painting a picture where this year is going to be a difficult business climate. We're going to continue to see layoffs. We're going to continue to see struggling businesses in 2023. He's given us that he understands that, but he's also then painting the picture that Tesla will do well and will push forward with that. In addition, there's also another clue that he dropped about future developments, future products, new products are going to come out. If he was desperate to rally the share price of Tesla, he could have dropped a nugget in that, in terms of what that's going to be, right? And usually when these nuggets are dropped in these investor calls, it usually is a sign of desperation. They usually know that there's a lot of eyeballs on these calls, and they're looking for that boost in confidence, that boost in share price. And he's got a lot of spare cards he has not played. So when you see a player sitting with a bunch of cards that hasn't been played, you know that they're not a weak player, right? So there's a couple things we can take away from that. In terms of their current developments, we also know that the Tesla Semi is obviously rolling off. They are creating that new generation. I think it's the 4680 class batteries. They're monster batteries. But everything about what has been said here is extremely positive. He had some tough questions thrown at him. The only thing that was maybe a negative sentiment is that he plugged Twitter, saying, every business should start to use Twitter. He plugged Twitter. Look, is he wrong for doing it? I don't know. I think speaking about Twitter speaking about a private company that he owns in a public company's shareholder meeting, I wouldn't have personally. I wouldn't have done it. He's got his reasons for that. But yeah, absolutely. He plugged it. He definitely wants to drive the price of Twitter. He definitely wants to fix things there. But over and above that, guys, it's very clear. He's confident about the future. They answered all the right questions. Yes, he messed up in terms of some of his wording and he stuttered around a little bit. But ultimately, from my perspective, I think he has done a great job, and I love Twitter, Tesla as a business. Just quickly looking at how Tesla's performing after hours, we can see that Tesla has moved from $144 a share and spiked up to the 151. That's already a $7 increase on their share price, right? So Tesla's already making some gains, making some moves here. Again, I would like to see what happens after hours. And again, as we get into trading tomorrow, how people relate to this. Again, how that earnings call continues to develop. Ultimately, if that remains positive, the sentiment remains positive, the price action is clear that Tesla is in a good position for a long, for a buy. It's clear. It's written in stone. The earnings call, we've heard it wrapped up. We've seen the EPS. We've jumped through the financials. And all I want to say is to those of you that are still here, congratulations for sticking in through your first earnings call. Now, in other earnings calls, sometimes we take a position before the call even happens. However, for this one, because of the fact that we want to play it safe, we could have taken a position earlier before market closes and essentially ride the volatility as we did in the previous earnings call with Tesla. However, this one, because we were anticipating a bunch of new sort of traders to this space, we wanted to take it a little bit slower, guide everyone through it, see how it plays out tomorrow, and then go in it together. Again, I see when I jump into things too soon without other traders, sometimes people get a little bit despondent and want to jump in and wait when I jump in. That's what it's all about. Showing up is what it is all about. Alverna just said it there. Showing up is 90% of the work. I hope you've learned something. If you've learned something, please drop it in the comments in any way, shape, or form. If you've learned something, if you found value in this, just drop it in the comments. It's a small ask to add, but just to make sure what we're delivering is of value to you. Again, remember the purpose of these shows is to make sure we deliver value. It's not here to just take up your time. Again, it's that we know your time is important. By giving us your time, we want to make sure that it's being utilized in the best possible way. And we're imparting in some small way, shape, or sense on a day-by-day basis, some form of information to take your trading to the next level. It's more important than just trading, right? Elon said it. We listened to it. A recession is coming. He thinks it's even going to be a bad one. We've been saying this for a couple of weeks, if not months. We need to all have a diversification of the skills and tools we have to be able to make money. We have some amazing testimonies in Globex of traders who had businesses who started trading to supplement their business income and have now surpassed what their businesses were making in a pure trading capacity. Some of them are in these chats, are in our live broadcasts, and they will share their own testimony in due course. But it's an important time to learn and diversify. Make your mistakes. Get the learning curve done. Pay your school fees. Ask questions. There's no question that is a silly question. Pay the learning curve, get in it, get out, and make sure that when times hit, and they are going to be tough, that you're in a position you can diversify. You can lean on the markets. You've got your risk management in play. You're able to diversify with different products. That is all that we wish for you. And that's the purpose of this channel, is to empower and impart and grow a community. This is for every single one of you. I'm here for you guys. You guys are what keeps me in these broadcasts and makes me want to come back, makes me want to do my thing. So to every single person that's been commenting, doing your thing, keeping the love, guys, you are amazing. We're well over 2 hours into the stream, and yet the energy is high. At 2 a.m. in the morning, to be sitting with you guys live, ready, doing your thing. I appreciate you guys more than I have words to properly talk about. You guys are absolutely amazing. So I'll go to the comments a little bit later. I need to get home. I need to take my loved one. She is on a plane in a couple hours to Joburg. I'll be getting back, preparing for Pounds for breakfast. I might have to pull an all-nighter. So if I look a bit broken in Pounds for breakfast, you know why. But more than that, just know that I appreciate you, and you guys were part of this session together. So I will see you guys all Pounds for breakfast. I'll do a little bit of a breakdown on what we've seen here tonight, but not in as much detail as what you guys have. but we're going to do dollars for lunch. I'm super excited for dollars for lunch tomorrow. We're going to reassess our strategy, our cheat code for US30, as well as trade Tesla, as well as the New York Stock Exchange. So I'm super excited for that. So guys, I will see you a little bit later. I can't even say I'll see you tomorrow. I'll see you in a couple hours. But until then, just know you guys are absolutely amazing. I appreciate you as always. And just know you're appreciated, you're loved, wherever in the world you are. Guys, you know the drill. Remember to learn and trade the Globex 360 way. And I'll see you a little bit later. Goodbye.